Incorporated. For more on the Fed and the impact of Hong Kong stocks, we're talking now to Lachlan Christie, Managing Director at equities firm Typhoon 8 Research, and he joins us now live from our Hong Kong studios. Lachlan, thank you so much for joining us.
Pleasure.
All right, earlier we had Dominique Riffico of Barclays Capital saying that the House believes that we won't see a shift to a neutral stance from an easing bias when the Fed meets tomorrow. Would you agree with that?
Actually, our position is that we think the Fed will be moving to a neutral bias, but either way, really, it's unlikely to have any material impact on the Hong Kong markets. Obviously, there are indicators that are creating the debate about what the Fed will do, and those indicators reflecting what's happening in the U.S. economy. However, the liquidity conditions here in Hong Kong will remain, that is, very loose liquidity will remain for at least 3 more months, and there should be no impact on the Hong Kong market, regardless of whether they shift their stance today or in the next meeting.
Lachlan, let's take a look at some earnings reports coming out of Hong Kong today. Let's start off with Sunday Communications. What are you expecting from the numbers? Consensus estimates are that we're going to see net losses of 160 million Hong Kong dollars.
Yeah, that's where our expectations are too, in line with consensus. The net losses will continue. The thing to watch, though, of course, will be average revenue per user. We should see that move up, we expect, to about $250. The other things that investors will be watching is whether there's been any growth in the subscriber base and whether the company has been able to keep a cap on its churn rate. But overall, the stock is trading at a 25% premium to its comparable smartphone, and we can't see any more value to come out of that stock, really. And in fact, we believe that premium is just a reflection of an acquisition premium ahead of what is an inevitable consolidation in the sector.
Lachlan, quickly before we let you go, how about Sino-Land? You like the stock? They're out today as well.
Yeah, we do like the stock. We expect results, in fact, to be flat, mainly because of ambivalent property development profits. But in fact, the stock is trading at about a 40% discount to, at 40% of its net asset value. And this is a stock which is set to recover, and so far as residential property market should recover, its development margins should turn around very soon as cheaper land stock comes online. So we are favourable, very much so, of Sino-Land despite mediocre results expected today.
Lachlan Christie, Managing Director with Typhoon 8 Research. Thank you so much for joining us live.